Welcome to the latest Manager Mix, this episode focusing on ETFs. I'm your host Laura Dew, editor of Money Management, and with me today is Ben Leung, head of systematic investments at Macquarie Asset Management. Thanks for coming on today, Ben.
Well, thank you for having me.
So today we're going to talk about systematic investments. Can you describe systematic investing and what it means for investors who might not be familiar with that term?
Systematic investment at its core is a really effective way to cut through the noise and the chaos and the volatility of the market to turn them into actionable and disciplined investment decisions. The process itself, it's not dissimilar to the process of preparing a complex meal. When you're cooking for your loved one, your mother, your partner, or yourself, if you've worked really hard, you don't just throw ingredients into the pot and hope for the best. You're carefully selecting the ingredients, you are carefully measuring it, you're following a recipe, but also, cognizance of the ambience. If it's a hot day, you probably detune the spice. If it's a cold day, you probably don't want frozen desserts, so on and so forth. To really fine-tune how the ingredients come together and deliver a profile in terms of taste, in terms of your other senses to deliver, an excellent culinary experience. In the same way, the systematic process takes our ingredients, the companies or the heroes of the dish, as they call it in MasterChef, to acknowledge the environment, but also the attribute of each one of those stocks and how we can fine-tune them to give our investors the best chance of success in the prevailing environment. And each day we repeat that process. We combine the best of our financial knowledge, data and technology to allow us to canvas the entire market for the best opportunities. So what the investors are getting really with systematic is a transparent, disciplined, but also an adaptive process to deliver the best outcome.
And the Macquarie Systematic Core ETFs, they've got an interesting fee structure. Can you tell us a bit about that?
Yeah, nobody wants to talk about fees, but I think our story really is one of alignment. For the core ETF strategy, we have a incredibly low base fee, complemented by a performance component. What that means is that when we deliver for our investors and outperform, we will get compensated. And when we don't, the expenses for the investors will be reduced accordingly. The story really is we win when investors win. And compared to a static fee structure, what our investors get really is an alignment of outcome. There is less concern around, or less burden of assessing cost benefits, and then certainly trying to diminish the regret of overpaying for underperformance. And I think that's a really unique proposition for us.
And how is active management different to passive from a systematic perspective?
Yeah, in many ways, passive investing is a naive form of quant. The key difference between passive and active from a quant lens is that passive is static and active is adaptive. If you think about it in the context of, say, a navigation system, I was thinking about it on the way here. Remember TomTom, the very first generation of navigation. Yeah. And then you punch your destination in, and it tells you that you're going to get there in 20 minutes. But once you get in the car, you might not get in 20 minutes because it doesn't acknowledge that the route might have changed because of traffic, because of road changes, or other, prevailing environments. But under an active approach, we are constantly thinking about the conditions. We are positioning and repositioning every parameter to make sure that it's most effective for the current environment.
Yeah, that's a really good analogy to use. And can you talk about what are some of the factors that the process uses?
Without giving away our secret sauce, I can make some high-level comments about what factors go into our process. From the return side, there are over 70 dimensions that we consider. And within those 70 attributes, they would refer to things such as valuation, balance sheet strength, quite complex measures of market sentiment, as well as information gleaned from adjacent markets like the shorting markets or the options markets. Alongside that, we have another 130 factors, which allows us to calibrate the portfolio in response to the macroeconomic environment in terms of style exposure, sector risk, and stock-specific risk. So all in all, we're looking at about 200 odd factors that goes into the recipe, shall we say. But the key part of our process really is thinking about deliberately how those factors actually interact with each other to deliver the best experience for our clients at any given point. And that's really important because the risk of relying on a single factor could mean that, while that factor is effective in some environments, they are less effective in other environments. There is a role for single style factor exposures, particularly in balancing the exposure of the total portfolio. But for the pursuit of a consistent alpha outcome, diversity, robustness, ensuring that we have a good breadth of alpha opportunity that would work under all environments is key.
So systematic investment is typically thought of for institutional investors, but Macquarie have launched a range of systematic core ETFs. Why did you want to broaden this out to reach the retail audience?
Yeah, as you mentioned, traditionally quant strategies has only been available for very, very large mandates with incredibly large minimums. And seeing the advisor market and the mum and dads develop over the last 5 years, we believe that equipping them with greater and more powerful tools is the right direction. So in the last 18 months, we have launched MQAE and MQEG, our two flagship quantitative strategies, into the ETF markets, which is now readily accessible by advisors and the wealth markets through the ETF platform. And ultimately, we're hoping that that capability, alongside traditional active, as well as passive, will allow investors to be able to create better outcomes for themselves.
And how long has Macquarie been running these systematic strategies?
Yeah, Macquarie's been running systematic strategies for over 30 years. I've been part of the team for more than 2 decades. And for a large part of our lives, it's really been servicing large institutional clients. So as of today, we've been entrusted with 85 billion of assets under management. And we're really excited about bringing this capability to the retail market so they can benefit from institutional quality money management that's backed up by a process that's been developed and evolved over 30 years, because longevity is really important.
Yeah, that sounds like you've been doing it for a long time, so a lot of experience behind there. Why is that longevity particularly important in systematic investing?
Longevity is really important in systematic investing because ultimately it is built on top of experience and learning from history. If you think about even the evolution of AI, ChatGPT, for example, the more data it has, the more data you provide it, the more effective it is in responding to your needs and responding to the questions that you pose. The same occurs in a systematic process. Over the last 30 years, we have experienced every single day, and for every GFC, for every COVID, for every market experience, we have accumulated insights and accumulated knowledge that has allowed us to enhance the investment process. And that is an incredibly powerful edge compared to new entrants. Investors not just getting exposure to a brand new idea or running a risk of new model. What they're getting exposure to is the accumulation of 30 years of experience, which has been tested by different market cycles, by different market environments, and many, many different opportunities.
As well as this experienced team, what are some of the other factors that can really drive successful systematic investing?
The key part of success in systematic investing is really diversity of thought. Compared to your traditional investment managers, which may be staffed purely by excellent financial practitioners, our team consists of many people with many different backgrounds. Supporting the deep financial knowledge, there are also scientists, engineers, microstructure specialists, and the systematic process allows all of them to really bring their expertise into play in delivering for our clients. It's not only about selecting stocks, nor is it about identifying the best factors. As we spoke before, it's about combining those factors, but it's also about how we interact with the market, how we uncover liquidity, and how we also move forward from a research perspective. So within my team, there's an incredible breadth of expertise, and the systematic framework allows them to really shine in their respective ways.
Great. Well, yeah, thanks for your comments, Ben. It's been really interesting to sort of hear about that different type of investment process. You've been watching Ben Leung from Macquarie Asset Management. Thanks for watching The Manager Mix.